Keys to successful ERP implementations, Macy's big accounting scandal, and the top transformation mistake that you're making right now. Those are just a few of the topics we're going to cover here in episode 201 of Transformation Ground Control.
Welcome to Transformation Ground Control. Ground Control. The podcast that covers everything related to digital transformation. This podcast features technology agnostic and international discussions related to digital strategy, software selection, implementation, change management, business process optimization, and everything else you need to know to make your digital transformation project successful. Whether you're embarking on an ERP implementation, supply chain transformation, or any other business or digital transformation, this podcast is for you. Now, here's your host, Eric Kimberling.
5, 4, 3, 2, 1.
Ground control is the major song.
Hello, welcome to Transformation Ground Control, episode number 201. My name is Eric Kimberling, and this is the podcast that has everything to do with digital transformation. It's the tech agnostic and independent view of digital strategy, software selection, implementation, and everything related to digital transformation. So thank you for being here today. I'm the CEO of Third Stage Consulting. We're an independent consulting firm that helps clients throughout the world reach the third stage of digital transformation success. And joining me, as always, is our co-host, Darian Chwialkowski. So, Darian, thanks for being here again today.
Yeah, thank you for having me.
I'm excited for our show today. You can find new episodes of the show every Wednesday by going to transformationgroundcontrol.com. The show is sponsored by Third Stage Consulting and produced by Major Tom Productions. So thanks for being here today. We've got a great show for you today. We're going to get to some social media questions to start. We're going to get into some newsworthy topics, including Macy's big accounting scandal that was recently uncovered, FTC's investigation into Microsoft. We're going to talk about that newsworthy item as well. And then later in the show, we'll have Alec Epstein on, who's the CEO of Bryant Park Consulting. And he's going to be on with me talking about keys to successful ERP implementations. And then finally, later in the show, we'll get into the one top digital transformation mistake that you're probably making right now in your project. We'll share that with you and have a discussion around it there. So before we jump into all that good stuff, though, tell us what you've got in store for us from social media questions, Darian.
Yeah, some good social media questions today. This first one is, hi, as you mentioned, if a company places a high value on strong financial capabilities such as accounts payable, accounts receivable, and general ledger, then SAP S/4HANA might be the best choice. However, does that mean Oracle or Microsoft Dynamics 365 have weaker finance modules? Could you provide more details about their strengths and weaknesses in finance? We're planning to choose the best fit solution for our organization.
That's a great question, and it's hard to answer in a concise way without knowing the details of what this person's requirements are and priorities and all that stuff. But what I will say is if you compare S/4HANA to Oracle or to even Microsoft or some of the other ERP systems in the marketplace, I don't want to say they're not all the same when it comes to finance and accounting, but a lot of the back office, back end transactional stuff is comparable. And where the real differentiator comes in is in terms of reporting and analytics and how easy it is to get information and data out of the system. So that's one aspect. The other aspect that's sort of more of an intangible functional difference that might be more relevant than the actual accounting workflows would be just how easy it is to integrate some of those accounting functions and workflows into other parts of the business, whether it's a manufacturing operation or warehouse or distribution or retail or whatever it is, and just knowing that you've got that that more operational functionality that ties in well to the accounting and finance function. So I'd say those are probably two of the big differentiators, and then you also have to look at things like just the ease of customization and the ease of integration into other third-party systems. So I think what ends up happening a lot of times is the finance group, even if the finance group is looking at it from a perspective of what is our functionality and our preferred needs and system requirements and all that stuff, that's good. You want to do that, but you also have to look at the integrated workflows and how it affects other parts of the business and some of those other intangible aspects of the technology. And I think that more than anything is probably going to help you differentiate between an S/4HANA and an Oracle in this case.
Yeah, that makes sense. Our next question today is more of a statement than a question, but I wanted to get your take on it. The statement is that there should be a migration plan, and it's more important if old data is migrated to the new ERP system to speed up the transition. What are your thoughts on that?
Yeah, I mean that is a common debate and a common philosophical discussion or controversy that I think is hard to settle. And you have to look at a couple different angles before you decide what the right path is. I mean, one is, how important is time and speed to get through the implementation? How important is that to you? Because if that is a key driver, then yes, not pulling over data and not bringing as much historical legacy data over is probably going to help you. You also have to look at, though, what the current status is of your legacy data in your current systems. If the data is in pretty good shape and it's not going to be a huge change to map, the old ways of the data structure into the new system, and it's fairly comparable or relatively comparable, then it may not be as big of a risk for you to bring over more legacy data. But if you're like most organizations have dirty data. There's a lot of cleanup that needs to happen to get the data right. The mapping from the old data fields to the new data structure in the new system is just a lot different and prone to error and things like that. If that's the case, then you may want to throttle back and say, well, we're going to err more on the side of bringing over less data. But if you bring over less data, okay, you might have solved one problem. You solved the problem of not overcomplicating the project and not adding to the timeline. And in some ways, you're simplifying the implementation by not bringing as much data over. But then the question is, well, what do you do with that data? Like, how are you going to get to it? Because chances are you're going to need some of that historic data for audit purposes or regulatory purposes or just your own internal reporting purposes. So you've got to figure that out. And so you're fixing one risk, but now you've created another risk and problem you've got to go fix. So you've got to look at sort of the cost benefit of both approaches and figure out, which is the bigger risk. Because you could go buy like a data lake or like go get Snowflake or some solution like that where you can just dump all the data in there, have access to it, and not have to worry about bringing it over to the new core ERP database. But now you've got to worry about integration. You still have to deal with the fact that the data is dirty if it is dirty. So there's a certain minimum amount of data cleansing and cleanup you'll have to do. I mean, if you want to get value out of your current system. So it's just a matter of finding how much of that do you want to do and how much can you tolerate and what's the cost benefit of it. So I hate to be so ambiguous, but you really have to look at all those factors to determine whether or not this person and their comment is right, or if that's relevant to your organization or not.
Yeah. So it really depends on your organization and what you guys need as an organization, I guess.
Yeah, exactly.
Well, that was great. Some great questions or comments from our audience lately. But I want to get into our first newsworthy article of the day. We have some good ones today. So this first one is about Macy's and their accounting scandal. So Macy's recently revealed that $154 million was manipulated in a delivery expense over the past 3 years, forcing the retailer to delay its earnings announcement. The employees' use of an enormous accrual and entities exposed significant weaknesses in Macy's audit processes and enterprise systems, which failed to detect the manipulation. While no criminal intent has been identified, experts suggest that the employee likely aimed to enhance financial metrics for performance bonuses. Eric, I kind of want to get your overall take on this. First of all, what does this incident reveal about the limitations of current GRC and ERP systems in catching accounting manipulation?
Yeah, that's a great question, and it's not that common that you hear about these massive lapses, in our internal controls and whatnot. So there's a lot of questions that come to mind. One is something you mentioned, which is the current internal systems they have, the technology system. So what ERP system or systems are they using, and how is that possible that someone could create these processes that were so far out of line with general accounting principles, as well as just company policy and all that stuff. So that's one question. Second question is, what about internal audits and controls? I mean, even with the best technology, if you don't have internal audits and controls in place, you're opening yourself up to potential liability. And so that's the second thing that comes to mind. And then the third thing that comes to mind is a lot of times for as much as we talk about cybersecurity and just security in general with technology, it seems like we're myopically focused on the outside of the organization, like hackers and people phishing or spoofing people and trying to steal money from outside in. But this is a good reminder that there's also the risk that you could have people either intentionally stealing from inside or which is even more common, you get people that just make innocent human mistakes because you don't have the right processes or the right technologies in place. So when you think about cybersecurity, I guess the third point is when you think about cybersecurity and security in general, you have to think of it not just from the perspective of hackers, but also just your own internal processes and controls, and making sure that someone is keeping an eye on that stuff.
Yeah, for sure. And do you think that now or in the future there will be specific technologies such as AI? I know there's machine learning that could help detect these anomalies in accrual accounting.
Yeah, actually, that's a great point. I think that is a really good use case for AI and machine learning because, I know there's certain things that are a little bit easier to track. I'd say, I don't know the details of how these people used accrual accounting to create, to basically manipulate the books. But one of the other challenges that you often see is that, something as simple as like three-way match when someone's buying something. So like if I work for a company and I want to buy, a new computer, I have to issue a PO, and then the computer gets shipped to me, and then I get the invoice. The three-way match would suggest that you have to make sure that the invoice of what you ordered, what you received, and the invoice of what you're going to pay, it all matches. And so that the payment, you're basically, it's a check and control to make sure that you pay for what you actually ordered and what was received. And a lot of times what happens is people will build into their systems controls to where the same person that pays a vendor can't also be the one that sets up a vendor, because otherwise, if I could do both, that means I could set up a vendor called Eric Kimberling LLC. I could create a fake invoice and then pay Eric Kimberling LLC all, the same security profile. So that's an example of where you have to set up your ERP system to establish that control. But to your point, AI and machine learning could also pick up on that and say, hey, here's a red flag here because we know this is potential fraud, or this looks suspicious. So machine learning can sort of flag that for people. So I think it is a good way to great point, in a good way that companies like Macy's or others that are concerned about cybersecurity, especially with internal cybersecurity, that's a good way to go about it, or a good way to mitigate that risk.
Yeah, absolutely. And I kind of want to switch gears here a little bit and go to like culture and training within the organizations. What role do you think that corporate culture plays in enabling or preventing these types of manipulations happening?
Yeah, I think you hit on something that was really interesting, and I haven't read the article yet in detail, but the comment around the theory that it had something to do with performance bonuses, I thought was interesting because I've studied, I remember when I was in grad school getting my MBA, we studied a lot around organizational alignment and ethics and things like that. And one of the use cases that sort of stuck out was a company called Kidder Peabody in the 90s. Had a super aggressive culture, super gunslinging culture with really high earnings potential. And what it did is that the pressure on people to perform and the financial incentive was so great that it was creating these perverse behaviors where people were, I can't remember what exactly they were doing, but they're doing something similar to this, where they were inflating numbers and they were doing things that were unethical and in many cases illegal. Because there was so much of pressure as an organization to drive that kind of performance. So it was sort of this one kind of reminded me of that, where it sounds like there could have been some internal pressures of like management pushing down these expectations and potentially lucrative bonus structures or whatever it was that was causing the sort of perverse behavior. So I think you do have to look at the consequences of the downside of the culture you create and the culture you're building, and at the same time look at your internal processes and controls and systems and all that to make sure that you've got, checks and balances in place there.
Yeah, absolutely. And how do you think that CIOs and CFOs should balance the need for technology efficiency with ensuring proper human oversight in financial reporting?
Yeah, I mean, it's a good reminder that, for as efficient as you may want to be, I mean, there is such a thing as being too efficient or too detached from operations, or to decentralizing or trusting too much in a team. And you do have to have some level of oversight, and it's okay. It's not a bad thing. I know right now all the business literature talks about how great flat organizations are, and not micromanaging. Micromanaging is not a cool thing to be talking about, but there are times where you do need to call it micromanage. I don't say that in a bad way, but trust but verify, or keep an eye on the controls and have the right controls in place. Those are all things that you need to be doing as an organization. And that's what every good company does, is finds that right balance.
Yeah, absolutely. A super interesting case here with Macy's, not something that we see every day. So I feel like that was a great topic for today, and a good reminder for all the different companies out there to maybe just check on their financial systems.
Yeah, it's a good use case for or a good business case for why, a new ERP system might be time for a new ERP system, but it's also a good reminder that just technology alone isn't going to fix the problem.
Yeah, absolutely. Well, I want to get into our next newsworthy article of the day. This one is about Microsoft. So the FTC is investigating Microsoft for alleged anti-competitive practices in its cloud services, specifically targeting the federal government. In 2021, following the SolarWinds hack, Microsoft pledged $150 billion over 5 years to enhance government cybersecurity. The deal included incentives like free first-year access to G5 security capabilities and consulting services. However, the agreement reportedly imposed steep fees on agencies that later would switch to competitors, effectively locking them into Microsoft's Azure ecosystem. Critics argue that this strategy may be a breach of antitrust laws by deteriorating competition and exploiting government procedure processes, which typically require competitive bidding. While Microsoft claims that its intent was solely to improve federal cybersecurity, legal experts suggest the deal's structure raises concerns about undue influence and monopolistic behavior. So, Eric, with this, I think this is a very interesting topic, something that we've touched on a couple times, but what specific aspects of Microsoft's deal with federal government might the FTC consider anti-competitive, and how could this impact future cloud contracts?
Well, I think, for better or for worse, Microsoft is one of the early pioneers of this concept of vendor lock or vendor lock-in. You think back to the 90s, when I was first starting out in my career, I mean, you had companies that had used Microsoft for, obviously their Microsoft Windows or Windows-based devices and things like that. And over time, Microsoft has just expanded their reach into ERP, for example, into SharePoint and Microsoft Teams. And they've got all these productivity tools that are heavily used and have very high adoption rate across, in multiple industries and whatnot. And, back in the 90s is when Microsoft first started getting in trouble for anti-competitive behavior, largely because of this concept of I don't know if they called it vendor lock at the time, but they would do things like tie in their own web browser into Windows to where it made it harder to get someone else's browser, a competing browser that wasn't Microsoft. And there's antitrust cases against them. And I think they ended up having to separate Internet Explorer from Windows, or at least give people the option to opt out of Internet Explorer if they're using a Windows machine. So Microsoft has had this issue, and I don't know if it's a cultural thing or if it's just a good strategy because it does sell software, but they tend to walk that fine line or that gray area of selling a lot of software, but doing it in a way that could be viewed as anti-competitive. I think the key here is that it sounds like from what you said, they've made it difficult to switch. Anytime you make it overly difficult to switch from one software provider to another, that's where you're going to run into trouble, especially if you're doing it to the government. I mean, I kind of laughed a little bit when you were saying that, because I thought, well, if that's probably the one customer or client you don't want to do that to, because they may come back and sue you. And it sounds like that's what's happening here. But that is something that they've struggled with. But I think what it does is exposes a common tactic in the market, which is to create vendor lock-in. And I think vendor lock-in is going to become a bigger challenge as cloud adoption increases and continues to increase. And as these big ERP, these big tech providers continue to expand their offerings and try to lock people into these big, massive usages of the software. I think it's something that would have already happened, quite frankly, if this was a consumer-facing issue. Like if businesses did this to individual consumers, this would have been regulated and stopped a long time ago. But because we're talking about B2B, I don't know why, but governments don't tend to take it as seriously or be as concerned when businesses get screwed or businesses get, the short end of the stick. But when it's consumers, they step in a lot faster, it seems like. And I'm talking about governments in general, U.S. government, the EU, whoever, insert government name here. So anyway, I think it's probably just a matter of time, though, before that becomes more of a problem. But I think it's good that this is coming to light, because I think there's a lot of scrupulous or sketchy behavior that big tech providers engage in to try to lock people in.
Yeah, for sure. And I guess if we want to place blame, does the blame solely fall on Microsoft with this, or does the federal government need to take some responsibility, for these contracts that were signed?
Yeah, I mean, that's where else I was thinking when you were saying it. I was like, well, if it was a competitive RFP bid process, then why did they pick a solution that, locked them in that way? Now, I guess there's both sides of the argument that, like, they should have known. It's sort of like buyer beware. You should have known what you're getting yourself into. So it's sort of like shame on them. It's also shame on Microsoft for trying it. But is Microsoft totally at fault? Probably not. I mean, the government should have caught that. Someone in procurement should have noticed that was a problem. But in their defense, maybe they didn't know enough about the contract or understand the assumptions or understand the fine print enough, because they're not well versed in this. I don't know. I couldn't tell you on that. But it is, for all the buyers out there, it's a good reminder that you don't have the government or a regulator necessarily to save you, if something like this happens to you. So it's really incumbent on you to make sure you've got either your own eyes and ears on it, if you understand the contracts, or if you don't, bring in someone that's objective and independent that can help you identify what some of these pitfalls and risks are. And spoiler alert, one company that could do that is our company, which is Third Stage Consulting. That's something we do, is help our clients identify some of those risks so that they don't get into a bind later on.
Yeah, absolutely. And I know Microsoft, in this article, they claimed that their sole goal or their only goal was to meet the government's urgent security needs. But how does this align or contradict the reported steep fees and vendor lock-in strategies that they came with afterwards?
Yeah, I mean, they can spin it all they want, but that is what it was. It sounds like it was an attempt to really make it hard to switch and to guarantee that revenue and that profit for themselves in the long term, which, they're a for-profit business. That's their job on one hand, but on the other hand, there's other ways you can go about it. And, in the private sector, that stuff probably isn't going to fly as well, because I think you're going to get more sophisticated or more, or less tolerant, people that are going to tolerate that less, because it's their own profit at stake versus a government entity that isn't as concerned about the profit motive. So anyway, that's the way I view it.
Yeah, I mean, this was a good case study to see something that we talk about vendor lock-in all the time during interviews or YouTube segments or questions, but we don't always see case studies on it. So I thought this was a great example of that.
Yeah, it's very interesting. Really good stuff. Mm-hmm. I'll be curious to see how it unfolds and where, if they settle and if they continue to provide technology to the government. I mean, that'll be interesting to see how that resolves itself here in the coming months. Well, good. Well, thanks for those good questions and newsworthy topics. We're going to shift gears now, and we're going to start talking about lessons from successful ERP implementations. And to help us through that conversation, we're going to bring on Alec Epstein into the show. Alec is the CEO of a company called Bryant Consulting. They're a NetSuite ERP provider, but we're not just going to talk about NetSuite. We're going to talk about ERP implementations in general. So be sure to stick around for that. And then later in the show, we will talk about the top digital transformation mistake that you're making right now, or that you're most likely making right now, and we want to help you fix it. So be sure to stick around for that. We're going to take a quick break. We'll be back with more Transformation Ground Control.
If you are involved in any sort of digital transformation or business change initiative, you'll want to download the Digital Transformation Report. With its comprehensive overview of business and technology trends and best practices, this report is a must-have guide for any transformation project or executive team. Download this free report by visiting Third Stage Consulting at thirdstage-consulting.com. You can also visit our website to learn more about us or download independent reports, videos, and other best practices. Again, visit thirdstage-consulting.com today to learn how you can take your transformation to the third stage of success.
Are you looking for ways to promote your product or service to enterprise technology decision makers and influencers throughout the world, like the ones who listen to this podcast? Major Tom Productions creates media, events, and influencer marketing for B2B technology providers. Our productions are exciting, educational, disruptive, and effective. Most importantly, they create results. Our content is unlike any other in this industry, engaging, influential, and trusted by technology buyers and influencers throughout the world. Each month, our productions reach hundreds of thousands of targeted buyers and decision makers who trust and engage with our honest and tech-agnostic content. With long-tail viral results and engagement with our content, Major Tom Productions provides a way to reach your target market and create awareness, calls to action, and a connection with potential customers. So, collaborate with us today. Learn how we can feature your product or service on podcasts such as Transformation Ground Control, Journey to S/4HANA, and Journey to Dynamics 365. We can also feature your brand on our YouTube channel called Digital Transformation with Eric Kimberling, which boasts over 100,000 subscribers and over 2 million video views per year. You can also participate in our in-person events, including our Digital Stratosphere Conference. Contact us today to learn more. We can tailor a marketing campaign that works for you. We look forward to helping more people learn more about and become engaged with your brand.
Hello, welcome back to Transformation Ground Control, episode number 201. My name is Eric Kimberling here with Darian Chwialkowski. I'm the CEO of Third Stage Consulting. We're an independent consulting firm that helps clients throughout the world with their digital transformation journeys. And Third Stage Consulting is also, not coincidentally, the sponsor of this podcast. And the podcast is produced by Major Tom Productions. You can get new episodes every Wednesday by going to transformationgroundcontrol.com. And you can also see all the 200 past episodes of this podcast at transformationgroundcontrol.com as well. So I'm excited for our next guest, Alec Epstein, who's the CEO and founder of a company called Bryant Consulting. They're an ERP software provider, an ERP implementer focused on NetSuite. And we wanted to have him on the show to talk about keys to successful ERP implementations. Not at all focused just on NetSuite, but focused on ERP implementations in general. He's a guy that's been in the industry for a while and has seen a lot of his customers go through these implementations. So we want to learn from his battle wounds here. So with all that being said, Alec, thank you for joining today.
Thanks, Eric. Appreciate you having me.
Yeah, I'm glad to have you here. And there's a couple different angles we're going to cover here today. As far as ERP implementations, obviously, we want to talk about ERP implementations, what makes them successful, why do so many of them fail, sort of get your perspective on that whole thread. But before we jump into those questions, tell us a little bit about yourself and about Bryant Consulting, if you don't mind.
Absolutely. So my name is Alec Epstein. I'm the founder and CEO of Bryant Consulting. I've been in the NetSuite consulting ecosystem or ERP consulting ecosystem for my entire career. Began my career in-house at NetSuite when it was an independent company prior to its acquisition by Oracle. I was there through the transition as part of their professional services organization doing implementation work, then moved into the partner consulting ecosystem around that product and around the Oracle NetSuite ecosystem to help sort of organizations grow and transform on the platform. I eventually started Bryant Consulting. We're a leader in NetSuite transformation, ERP transformation writ large, and we support a kind of a broad set of services and technology platforms that help an organization go from legacy to modern capabilities and platforms. We've got about 150 employees, mostly in North America, but across the world. And we work with organizations in varying shape and size across industries. Been in business for about 4 years and work really closely with a lot of organizations like yourself, Eric, kind of post selection, during the selection process of an ERP implementation, during the implementation, after implementation. And so I'm sure you and I will be able to share a lot as it relates to success stories and how to be more successful.
Yeah, some of our battle wounds from having done this for so long. So
Yeah.
Before I jump into the ERP related stuff, you have a pretty fascinating backstory as far as you mentioned a little bit about the company. You've got 150 people, but tell us about when you started the company and the growth trajectory you're on, because that's an impressive story.
Yeah. Like I mentioned, I was an implementation consultant and eventually grew to lead consulting teams in transformation work. What I noticed in the consulting ecosystem, or the mid-market consulting ecosystem that I was a part of, is that as mid-market organizations started to adopt more and more complex technology and cloud-based ERP solutions started coming and becoming more broadly adopted in the mid-market, that kind of created a vacuum of opportunity for mid-market specific consulting organizations. And we see a lot of larger legacy consulting providers coming into that space, sort of lacking the nimble agility necessary to be successful in many cases, and also, I would say, struggling with fostering a successful work-life balance and sort of sane experience for consultants who are working day-to-day on these projects, oftentimes where projects have smaller allocations, shorter durations, and there's a lot more to touch, so to say, a lot more context switching involved as a resource. And so I think those opportunities, sort of seeing that opportunity to build an organization from the ground up that sort of serviced this market in particular and was built around the people that were delivering the service and what was in their best interest over a long haul, thought was a big opportunity. So I wanted to start a firm that was sort of dedicated to that, the success of the consultant, and ultimately then the success of the customer. And so starting Bryant Park Consulting was an easy decision in that regard. I was very lucky very early on to get other people to join me as co-founders and leaders in the journey. Cassius Kellogg, my chief operating officer, I have to give him a big shout out, and many others. And we were lucky to have real rapid adoption and respect within the NetSuite ecosystem, which has ultimately helped us sort of fan wheel substantial growth in a short period of time. I think really, again, it goes back to focusing on, how we make the consultants successful, and that really resulting in growth thereafter.
Yeah.
Yeah.
So what's been the biggest challenge you've had, growing that quickly and sort of carving out your own brand, your own name, your team's name? What are some of the biggest challenges you faced?
For me, individually, I'd say it's, my role transforming as the organization has grown, going from, a small team of a handful where you can sort of sit together in one meeting and everybody hears everything and everybody's aligned in strategy, to an organization now that requires, cascading meetings and communications in order to keep everyone aligned and moving in the same direction. That change has been one that has come rapidly for us, and something we've needed to mature maybe more quickly than other organizations, growing a little more slowly. So that's been a challenge. I think the things that have helped, like I mentioned earlier, finding and bringing on the best people, those people that can help to lead teams, motivate teams, train and enable other people. Those make a big difference and sort of serve as an extension of, myself and the culture and the organization. And I think in many regards, hiring those amazing people are kind of the only way to scale or grow in any pace, but certainly at a fast pace.
Yeah, that makes sense. That is a common challenge, like your role evolving, especially when it has to evolve that quickly from being a small handful of people to now 150 people, and how do you manage a larger team like that? So that's super interesting. But congratulations on all the growth. That's super exciting.
Yeah,
pretty rare.
Yeah, appreciate it.
So a couple of quick shout outs to the audience here today. Jonathan's joining from Montreal. Thanks for being here, Jonathan. Bailey joining from London, England. Thanks for joining today. Buggy on YouTube says, great content. And Buggy also says, literally a hidden gem on YouTube. So thank you for being here today, Buggy. And I appreciate that. And I look forward to hearing what everyone else is joining from here today. So I'm going to jump into my questions here about ERP implementation success, Alec, and we'll get the audience talking here soon as well with additional questions. But if we're sort of backing up here and just looking at the big picture, you're sort of consolidating, summarizing all yours and your team's experience with NetSuite implementations, ERP implementations in general. What do you think are some of the key factors that come to mind that are really those keys to success, and the things that successful ERP implementations do differently than the ones that struggle or fail?
Yeah, I would say that, we refer to them often as critical success factors, and we sort of try to codify them, learn as well from, the portfolio of projects that we've gone through to try and sort of simmer back and understand what went well, what didn't go well, and, sort of bring that together so that we can understand these, I'll say, principles or critical success factors more holistically. But the big ones I would say that stand out, executive commitment. So regardless of the size of the organization, you really do need sort of C-suite level buy-in and sort of commitment to the engagement. Where the project is going and the purpose for engaging in the project has to align to the organization's strategy. What is their 2-year, 3-year, 5-year plan, and how does this coincide with or facilitate that plan? The more aligned it is to the strategy and the more invested in the project the executive leadership is and communicates themselves as, the more likely the whole organization is going to rally around the initiative holistically. And I think that's sort of fundamental. With that, I'd say also I'd encourage you positive energy, right? A positive leadership. These big transformation projects are like jarring in some cases for lots of folks, and people are wondering, what the change and impact is going to be for them. And at times, the folks on the project team themselves and even the counterparts, third parties who are helping you in the process, right, can get, downtrodden or concerned or stressed, right, regarding the weight of the project, the effort that's in front of them to get the project completed. And I think that positive leadership from the top is really critical to making sure that everybody stays sort of in line and moving towards success. I'm sure you've sort of can resonate with that as a big driver of overall success in a transformation.
Yeah. And so much other stuff stems from that too. So many other things that you need to be successful in a project stems from whether or not you have that executive level commitment and that positive leadership. If you don't have it, then it creates a lot of other issues that a lot of times get blamed for the implementation failure, but really it oftentimes comes back to what you're talking about here.
Right. Yeah. And I think the other, one of the other things sort of, commitment doesn't necessarily mean, you're spending 40 hours a week on the transformation itself, right? You also, so another critical success factor is having what we say is a small cross-functional team of your best people, right, running the project. And so, depending on the nature of your business, whether you cover different regions, different lines of business, maybe you have different subsidiaries that have grown through incubation or acquisition, the representation of a core project team should really be kind of the best of every, I'll say, intersection of those dimensions, right? The best procurement leader from each region, as an example, or the best procurement leader globally, and really having clear involvement from the folks that are leading the org, the best that know the organizations the most, and giving them sort of delineated authority. I think that's super key as well, right? So empowering that small cross-functional team to get a lot done, maybe backfilling them so they have the capacity to really invest in the project. I think that's also a big driver. And if you have that executive level commitment and then this like core team that's got good authority and good allocation or capacity to work on the project and really knows the business and is entrusted by the leadership, I think that sort of is the complementary effect that allows for the executive leadership to continue to run the business, continue to drive the project forward, but without needing to spend, majority of their time in the engagement, so to say, day to day, and be successful still.
Yeah. It makes total sense. Here's a question that I'm not 100% sure the angle here, but we'll see if we can unpack it a bit here, or at least take a first pass at it. And this is from Assad on LinkedIn. And Assad says implementation should be recommended after an audit. What are your thoughts there? So maybe a way to reframe that, Alec, would be, what should you do to get ready for an implementation, or what are some of the prerequisites for successful implementation?
Yeah, I think, thoughtful planning and review of what you have in place is really key. So an audit, may serve in many cases as a mechanism to take a fine-tooth comb to the business and to your process to try and uncover areas of opportunity for improvement. And oftentimes we will have customers come to us where following an audit, some issue was uncovered, right? And the process to resolve or one of the drivers for resolving that is cost or reporting issues, et cetera. So in many cases, when an organization is facing challenges and they're uncovered in an audit, they may look to systems and technology to try and resolve some of the underlying causes of the fundamental problem that was resolved or identified in the audit, right? Reporting, accuracy, data integrity, controls, governance, et cetera. So it's definitely possible that following an audit, or one might strongly recommend considering looking at optimizing or changing or improving systems in some capacity. Certainly, if you come out of an audit with a very good understanding of your processes and your data, et cetera, as a result of that, you may be in a good position to begin a transformation. So I wouldn't say that I disagree with the question or the ask there. Hopefully that gets to the point. I don't know, Eric, if you have any other thoughts on that.
It's just a good reminder of kind of the value of what a successful ERP implementation can do. You know, it can put financial controls in place and more structured processes, repeatable processes. And a lot of it, so much of it is about scaling. And I imagine, you know, dealing with a mid-market as much as you guys do, and dealing with higher growth companies and your customer base, you know, I imagine that's a pretty big deal for them, you know, make sure they can create that scalability and, you know, repeatable processes and all that good stuff.
Right. I mean, a lot of, to your point, a lot of organizations that are in the growth stage may come to, you know, a NetSuite transformation services provider like ourselves, or just to an organization like yourself, trying to figure out or identify where they should go and what sorts of systems they should adopt so that they can be more ready to, you know, be audited, right? And be successful in that process. It's definitely easier to audit an organization that's running on a system that we'll say has more robust capabilities and audit logging and those sorts of things, as compared to some of the smaller, say, accounting and business process packages or Excel, right, as an example.
Yeah, makes sense. And, you know, you talked a little bit about executive commitment and leadership and how important that is to successful implementations. But what are some of the if we've sort of flipped that and asked the opposite question, you know, what are some of the most common mistakes that you see clients make, or even if they don't make them, you sort of have to talk them off the ledge or sort of advise them and to go in a different direction? What are some of those common instincts that kind of lead project teams astray in these projects?
Yeah, that's great. Great question. You know, one of the things that we see can happen in a project is that as you start to go deeper and deeper into each functional process area or step in a process, right, down to the state or transition between those states, et cetera, you start to uncover a lot of complexity or additional, nuanced scenarios that you may not have sort of encountered or expected to encounter. And in many cases, you don't encounter this because you're a business process owner who's not, say, doing that day to day, you know, trying to guide the overall project, or you're a project manager internally trying to guide the project, and you're finding that, you know, wow, there's a lot more complexity to this individual process than maybe we originally anticipated. Instead of a 2-hour meeting to have that discussion, we need 4 or 8, right, and so on. It's very common for this to happen, right? Is people tend to, and this is just part of life, or people tend to underestimate the complexity of what it is that they're getting into, or the overall project at large, and that's super common. What's important to do so that you don't experience, I'll say, extended fatigue or a sort of snowballing effect of requirements and scope is to have strong scope management. I think one of the principles that you should employ, you know, as you go through a transformation, right, is to try and narrow the scope as you go, right? As much as everybody wants to say, well, you know, we've agreed to this being an outcome, and these are the outcomes that I want to achieve. Many cases, the same outcomes can be achieved in a more simple way. And you have to really fight as you go through the project to try and find things to actually remove from scope or to try and simplify, as opposed to continue to allow for your commitment to stay unwavering as you identify more and more and more complexity. I think the reality is you know that complexity is going to arise. You know it's there. It's just not all written down in front of you just yet because you haven't spent those 4 to 8 hours uncovering it. Yeah. So what you should really try and fight to do as you go through the project is make a firm commitment and just have that sort of clarity to understand that the only way that if the scope of the project is becoming clearer and growing just by default because it's becoming clearer, what you have to do is try and narrow that scope as you go along so that the team can actually still achieve that deadline, right? Without, burning themselves, to the ground, right? To do it. And so I think that mentality can be kind of scary for folks, especially when you're going into a transformation. You think, well, I really need to achieve this specific outcome. Reality is there's lots of ways to achieve an outcome, right? Or the target outcome of timely financial reporting, good governance and controls, strong process, certain SLAs for customer satisfaction or, on-time fulfillment, whatever it is. I think all of those things can still be achieved in many cases with a simpler approach to maybe what you initially anticipate. You challenge yourself to try to narrow the scope of the project as you go, right? I think that's sort of a good mentality to have. I think that without that mentality, the complexity naturally grows. So you actually have to be very intentional about trying to resist it. Otherwise, you'll end up in a situation where inevitably you end up with a much bigger snowball than you anticipated rolling down the hill, and if you tell the team, that no matter how much snow accumulates on that snowball, we have to get it done on this particular time frame, you're going to really stress out your organization, all the people, everybody who's involved in the process, instead of trying to kind of narrow that as you go through. So anyways, that's sort of a high level guiding principle, I would say, but definitely a challenge that we see is people being very, very firm and unwilling to revisit and renegotiate what a process is going to look like initially, or what that first launch is going to be. And instead, kind of they're squeezing themselves between a timeline and their team's capacity and mental sanity and those sorts of things. And that's not a place you want to be in, right? You want to have calm and clarity, happy team, ringing the success bell on time as expected. But ultimately because you've been thoughtful about narrowing the scope as you went along. And Eric, I'm sure you've come along where in the middle of a project, you do a lot of these, project middle of process not going well, you come in and help revive or resuscitate or whatever I don't know what your terminology is preferred, but I'm assuming some of the times you come along, you realize, wow, these people are really trying to take on too much. There's far too much complexity here. We need to kind of break this down into more sizable chunks and pieces, or we need to try and narrow this down and sort of keep it simple for an initial launch so you can get up and running on something and add to it thereafter.
I agree. And these projects are complex enough as it is. They're going to be complex no matter what. So there's no point in making it more complicated. You don't need help making these projects complicated. They're already complicated. So you might as well help yourself by sort of backing off and breaking up into smaller chunks, like you said.
Exactly.
I'm here with Alec Epstein from Bryant Park Consulting. We're talking about lessons from successful ERP implementations. We've got a lot more to cover. We'll be back with more Transformation Ground Control. Stay tuned. I recently published my first book. It's called The Final Countdown: Strategies to Reach the Third Stage of Digital Transformation. And I wrote this book because I really wanted to find a concise way to share some of my knowledge around digital strategy and how to get started on a digital transformation journey. So in this book, I cover 3 different sections. I cover the people, process, and technology aspects of transformation, with the idea that it's meant to be a starting point, a launching pad for organizations and team members that are going through digital transformations. So I encourage you to buy this book. You can get it electronically, you can get it paperback, or you can get it in hard copy as I'm holding here in front of you. You can get it by going to thefinalcountdown.com. You can also search for it on Amazon if you shop at Amazon. Otherwise, just go to thefinalcountdown.com. Love to hear your feedback on this book as well. So I hope you check it out and hope you enjoy.
Interested in working for a company that truly values your unique skills and experience? Here at Third Stage, we don't hire based on resumes alone. We look at the full candidate, experience, and willingness to provide excellent service for our clients. Within a technology, independent, and agnostic consulting firm, you have the opportunity to learn across industries with a diverse group of clients. Our consultants also have the opportunity to diversify their portfolio and learn across technology systems. If you're interested in joining a high-growth entrepreneurial organization, please reach out to us at work@thirdstage-consulting.com.
Welcome back to Transformation Ground Control, episode number 201. My name is Eric Kimberlinger at Darian Chwialkowski. You can find new episodes of this show every Wednesday by going to transformationgroundcontrol.com. The show is produced by Major Tom Productions and sponsored by Third Stage Consulting. We're here with Alec Epstein from Bryant Park Consulting. We're talking about lessons from ERP implementations. And here's a great follow-up question from Alec on LinkedIn, and it sort of ties into what you were just talking about, Alec, around these workshops where you dive in and you start to understand the complexities. You start to get below the tip of the iceberg as it relates to your current processes and complexities and things you're trying to improve. But Alec asks along those lines, how and at what moment in time is this room for improvement of processes or organization management discovered and communicated? So in other words, like as you're going through this upfront design phase that you guys go through with your customers, you identify all these complexities and risks and challenges with the current processes, and then you define how it's going to look in the future. How do you, from a change management perspective, how do you start to communicate that, or what have you seen work better in that sense?
Yeah, I mean, I think from the first moments that you're engaging in the process of interacting with the third party who's advising you, whether that's in the sort of early exploration phases prior to making a directional selection of a platform or transformation or an initiative or direction altogether. And in a lot of those interactions, one thing that the team should first be trying to do is really understand your current state, your current processes. And I think in that understanding, oftentimes, your team also, it will come along, that understanding will also come along with a lot of, representations of pain points, and also sort of measures of performance, under those current processes, i.e. how fast are we doing something, at what rate of accuracy, et cetera. From there, you really start to kind of narrow in on things that are maybe the slowest, the least accurate, the least successful, or where the process is the most laborious, or taking the most time. So that kind of process review and process engineering exercise, a lot of folks like your organization, Eric, specialize in that type of work. And then you can really start to identify where there's areas of opportunity for improvement for your business, specifically for your business processes, and ultimately, start to map out where and how, there may be opportunities to improve with, be it additional technology, process change, something in between, or inclusive of both, personnel change, restructuring of your organization, all those sorts of things. So I'd say, really at the earliest stages when we're going through process reengineering and design, in a transformation is where we start to evaluate and assess where there's, opportunity, where there's going to be change, what the impact would be, and then start to plan for how we, address those changes and mitigate any risk related to pursuing those changes. I don't know, Eric, if that gets at it, or if you have any thoughts.
Yeah, I think it's absolutely true. I mean, you've got to, first of all, I think the key is you talked about internal alignment, executive commitment, leadership, and all that stuff. You do need, that's where the executive team comes in, as far as at least validating what you are willing to change and what improvements and scope you're willing to take on during the project, to make sure you find that right balance between wanting to keep things simple and not overly complex, but at the same time, you don't want to just go in and put in NetSuite or any other ERP system that just automates what you've always done, because chances are you're trying to improve that. So finding that right balance, I think, is where a lot of companies get stuck, and they get tripped up, because it's like in the quest to want to improve processes, they make things too complex, or in the quest to make things less complex, they end up just automating what they've always done because it's a path of least resistance. People aren't going to complain if you don't change things. So it's a tricky balancing act for sure, but that's where that executive commitment comes in that you were talking about before.
Yeah, absolutely. I think oftentimes, in order to make something more scalable or sustainable, you do need to change something, and there's going to be some impact to it. That's, I think, one of the other critical success factors, Eric, is the openness to change, management of change, organizational change management. That aspect of the project is super key. And, there's lots of specific examples where we almost see on almost every project, you need to really potentially reassess certain fundamental ways that you run the organization, right? And incentivize people. As an example, in an ERP transformation, you're defining how you do financial reporting. So as an executive leadership team, how do you incentivize your department leaders? How do you incentivize your line of business leaders? Are they running on a GP or gross profit for their line of business? Are you building incentive structures around that? What sort of visibility and behavior are you trying to drive out of your leadership team? And how does that feed into the project? If there's any sorts of changes that you're hoping to make, or if you're hoping to enable your team to be able to get a better grip on the business, take more accountability for their P&L, as an example, those sorts of things, which many people are looking for an ERP transformation to help facilitate. I think it's important that you really you evaluate how you are going to overall change and communicate the change to all of those leaders, and possibly even consider changing incentives, right? Incentive structures. I mean, that's big change. If you're running a business, moving the cheese on your executive leadership team and trying to align them to new performance objectives is a very big change. I think that goes all the way down the line as well to folks that are managing things like pricing and cost on services and items and salespeople being incentivized. How often do you come across an ERP transformation where you're tasked with trying to model their commission structure?
Right.
I mean, people come up with commission structures, predominantly in Excel. I mean, if you don't have a system in place today, you're just coming up with this stuff, and you're coming up with it from ideas. You're trying to influence behavior. And so it's almost always something very bespoke. And sure, you can go and get, commissions engines that can handle anything under the sun, and you can write anything custom in a report or a system for all intents and purposes. But if you don't want to completely kill yourself, you may want to just look at the capabilities of, say, a commission solution out of the box, or a module out of the box of a given ERP platform, and ask yourself, how can I achieve the same sort of incentives and behavior that I'm trying to drive, and the same sort of cash outlay on, incentive compensation or commissions, expense, but restructure it so that it just sits into the system a little bit more, nicely, or is a little bit more sensible and less, dynamic, right? I think those are scary. Those are scary lines to walk, right? Again, you don't want to go and restructure, your team's commissions very often, and you certainly would have to communicate to everybody why, it's beneficial to everyone and not going to hurt, their upside, for example, or their incentives. But driving that change, it can be very, very helpful. I've seen organizations spend hundreds and hundreds of hours trying to achieve commissions transparency with super crazy commissions modules where they could have probably achieved it in, a dozen hours if they were willing to maybe change how they incentivize folks. And more often than not, probably have driven the same revenue outcomes or incentives and goals, performance out of their sales team that they were really looking for, right? Yeah. This is scary stuff to touch, right? Incentives, commissions, those are some of the scariest things to touch when it comes to, a big project, right?
I agree. Here's a question, or just a point of clarification from Pranchu on LinkedIn. He says, by narrowing down the scope, do you mean phasing out scope? And I think that is one of two things you're suggesting. I think you were suggesting maybe either phasing out or reducing scope, or phasing it to where you're not doing it all at once. You're just breaking up into smaller chunks along the way. Is that the way you see it?
Very often, most projects will take place, or most transformations don't all happen in a single sort of start to finish project. And that's just, if you think that for the next 20 years, your company is only going to need to do one project, and 20 years from now, you're still going to be successful, right? And you're done. It's very unrealistic, right? I mean, that, or you have an organization that's just very stable, you have no interest in making any changes, and you like that, in which case you probably have a very great lifestyle, and I'm envious of you in that regard. But I think the reality is that for most organizations, they continue to try and grow and innovate, and obviously they operate in a world where everything is changing, and so you have no choice but to grow and to innovate in order to stay competitive in no matter what industry you're in, right? And more so these days, it's technology that's driving it. So what you have to kind of realize is that this process of transformation, unfortunately, it's actually never going to end, right? It's just going to go on, and it's going to continue going on forever and ever and ever, whether you like it or not. If you're going to be in business, get used to investing in technology and advancing your capabilities and incorporating more and more technology for as long as you are in business. It's just going to be the way that you operate now. And what I like about these modern SaaS cloud environments is that it actually helps you get into a culture of innovation, right? Take NetSuite as an example. I'll kind of give them a little pitch here. I'm obviously very biased, but the reality is that, every 6 months, everybody's getting a release, and that release is bringing you more and more capabilities powered by this enormous R&D budget of Oracle, right? Same sort of capabilities or model is happening across the world in all SaaS. And I think the reality is that, for you as an organization to adopt those things, you have to get used to incorporating change biannually at a very minimum, right? Mm-hmm. Otherwise, you're just going to let those things fly by. 4 years, 5 years later, you wouldn't have taken, advantage of all these capabilities that they're providing to you for the same, subscription costs in many cases you're already paying, right, for the software. And you're going to therefore not be as competitive as maybe other organizations that are a little bit more adept at incorporating that change, right, or incorporating those new capabilities. And so from my point of view, you kind of have to adopt this mindset of continuous innovation no matter what going forward, what better way to do it than jumping into a new ERP transformation and jumping into an ecosystem that helps you build that culture of continuous innovation and has really robust resources around it to help you sort of stay innovative over the long haul. So anyways, going back to the question, understanding all of that, you absolutely need to phase out your transformation, because guess what? You're going to have phases 2, 3, 4, 5, infinity forever in the future. So you may as well narrow the scope of what you're going to do first, so that it's consumable and achievable. So you can then replan, because a lot of people make great 5-year plans, but most organizations are reforecasting quarterly, biannually, because things change. And so too should your roadmap. Should be revisited and reforecasted. And with that, you need to kind of make your work sort of smaller and get things done faster, not longer and slower. And so in this world, I think phasing is kind of the only way to be incredibly successful, or to really adopt technology successfully in your organization. I think it's super key.
Yeah. Yeah. No, on the flip side of that, though, I agree with everything you just said, but the risk of what you just described with the ongoing change, continuous improvement, never really having a finite finish line where you're quote unquote done with the implementation, you're done with your process work and all that stuff. I agree with that, but there is a dark side, which is change fatigue. And this is a good question from Timothy on LinkedIn. He says, how do you manage change fatigue? Changing both the system and the process can be overwhelming for people. Do you give them time in the new platform before you also force process changes on them? So how have you seen this unfold in your experience, Alec?
Yeah, I think the phasing really helps with this, right? You're changing less at a time, and you're doing it a bit more incrementally with a smaller subset of people where you can spend more time with them, right? I think that reduces the fatigue. In my experience, fatigue is not because of the amount of time spent. It's actually often because of sort of a lack of communication, right? And the frustration that results from that lack of communication. Most people who get very well trained often aren't experiencing change fatigue. So my experience is that by phasing, you'll definitely kind of minimize that fatigue. But certainly you got to be thoughtful about, the folks that you're engaging with and how often you're changing their processes, right? And how substantial those processes are changing. So, you want to lay some good foundation, in your sort of systems landscape, whether that's your data architecture, your process, your organizational structure. Having a really good foundation is key. And then, this incremental change biannually or quarterly or whatever your release cycle is, so to say, thereafter, it should be small, controlled, changes that can be easily communicated and go through, good, I'll say, governance and communication, right? In our organization, as an example, we're really leaning into learning management systems and rolling out change to process and systems more often through a learning management system, right? That allows for us to sort of incrementally introduce change and make the change easy to access for people. I think those sorts of things can be really helpful as well.
Yeah. Yeah, I totally agree. And here's a follow-up comment from LinkedIn. It says, I get you have to adopt continuous innovation, but you need to have a culture of innovation, or else you're going to set yourself up for friction. So I think that's kind of what you're alluding to, Alec, is you're sort of creating the process you just described, is sort of creating that continuous improvement mentality, that culture of innovation, and by having these incremental ongoing phases. I mean, that's sort of what you're doing, is you're embedding that into the culture of the organization.
I think so. And, likewise, this is can be a big change for an organization, right? There's lots of companies that we collaborate with that, have been on an existing system platform with existing processes and personnel for a long time, and, are just now realizing that they are, losing market share as a result of a lack of competitiveness, or they're losing personnel to other companies where the day-to-day experience for an employee is superior from a system standpoint, which is realistically where 75% of your people are going to spend 80% of their time, right? Inside your systems, clicking and processing and reporting and doing things. So my experience for sure is that when you bring these folks kind of on board, you have a better outcome. Sorry, I lost my train of thought there.
Probably because I'm flashing up all these random comments on
Yeah.
Okay. Sorry, there's so many good comments coming in. I wasn't trying to distract you. I was just sort of showing them.
So you need to have a culture of continuous innovation. I think is very true, and it takes time to build it, right? And you're not going to go from a 40-year-old legacy organization that hasn't kind of driven change like this to one that's doing quarterly releases overnight. This is a process that takes time and requires upskilling your personnel, oftentimes bringing in external guidance, right? And folks that can help you build the communication and processes to help you facilitate continuous innovation within your organization. Be that folks like, organizational planning leaders, folks that help with digital transformation, sort of guidance and advisory like yourself, Eric, or personnel and talent management folks as well that might be able to give you advice on how to retool your organization to become more agile.
Yeah, totally agree. There's a comment from, I don't see who it's from, but someone on LinkedIn that says, Alec, you've changed. I'm not sure. If you have a Hepler in the audience, someone that knows you, maybe. I'm not sure.
And then, I've definitely changed. I've lost some hair over the years. And I'm now a little less tall as a result. And I've learned a lot for sure. So it's I think everybody changes, and I think that's something you asked earlier is like what was maybe something that in my journey has really helped me or allowed for me to be successful in starting a organization and running it quickly is like not staying the same, right? Not being rigid in my ways, trying to, like I mentioned, bring on folks that know more than me so I can learn from them. Yeah. I think likewise, trying to find mentors and other folks out there in the ecosystem or in different ecosystems, folks who are running other businesses, leaders in various industries or facets of life or the world, and speaking with them, learning from them, and trying to improve as an individual along the way. I think I'm glad to have changed. So thanks for calling that out.
Yeah, you had to have, in just a few short years for the company to grow as much as it has. Obviously, you have to have a great team, but you personally have to change as a leader and recognizing the types of talent you need and how you manage them and all that good stuff. Here's a
thought.
There's a good comment from Callie on LinkedIn. Callie says, Alec is brilliant. Several customers of mine have worked with him in the Bryant Park team. They speak very highly of their experience, consultative approach, and coaching their teams through these digital transformation projects. So we've got there's some fan mail from you there on LinkedIn.
Thank you, Callie. Much appreciated.
Here is a question I want to get to. Going back here for a second. Here's just a comment from Perry on LinkedIn, just sort of building on something you said, Alec. The CXO leadership has to be very clear. I had 2 bad experiences where there was a hidden agenda. So you really have to watch for those politics and internal dynamics that become more apparent as a company gets bigger and grows and that sort of thing. So how do you, I know you talked a lot about commitment and alignment earlier from the executive team. How have you seen politics, internal biases and politics and human imperfections? How have you seen all that stuff affect implementations or potentially derail implementations? And how have you seen clients overcome that?
Yeah, it can be very challenging. I think it's very natural for people who have invested, substantial portion of their time in their career to earn sort of the authority or position that they have within an organization. And when an organization is going through a lot of change, those things can kind of be put, and somewhat at risk, or they can move in ways that you maybe haven't predicted. And if you're somebody who's successful, you oftentimes get ahead by being able to control your environment and create predictable outcomes for yourself. And so this can be very stressful. And as a result, I think people can struggle to align their interests with those of others within the organization at times. And that could create conflict. And it's tough because those individuals oftentimes both do truly mean the best for their respective portions of the organization, for the organization overall. And it really tends to be the case that there could be sort of differing points of view. Now, when we come into an organization, it's hard to say whether or not some of those things have recently come about. We may see them arise on the course of a project. They may be existing and sort of inculcated into an organization's culture, and those are much more challenging to overcome. But I'd say, in general, the only real way to sort of suss out this type of challenge within an organization is to kind of bring people together, organize leadership, get people on the same page, set standards for what, interaction and correspondence needs to look like, create a very transparent, and highly accountable organization. And ultimately where individuals aren't subscribing to a culture of positivity and alignment with the rest of your leadership team, you need to consider making changes. I think the reality is that these are problems that are sort of irrespective of a transformation, but certainly impact a transformation substantially. You want everybody moving in the same direction, rowing a boat in the same direction. So if you've got, potential insurrection within your organization, definitely expect that that's going to be reflected in the outcomes of your ERP transformation, right? Whether that's differing process, over budget, beyond time, right? Wondering why that's happening. Well, you got people who aren't on the same page, right? And I think that's tough. So you got to work pretty proactively to get ahead of that. I would say that, working to resolve some of those things in the lead up to a transformation and trying to, put them on the table and suss them out is key. But I think they happen all the time. Sometimes they happen for good reasons, right? One example that I see is super common is, an organization is growing inorganically, and as a result, they acquire great talent from another organization, and they're forced to reconcile, who does what, right, in the new, combined organization, especially in a world where we're trying to find synergies by running on similar systems, organize processes, realize the benefits of that acquisition by sort of cross-selling and co-selling, et cetera, across lines of business, et cetera, between the acquiree and the acquirer. So in those sorts of circumstances, oftentimes you may have, really capable leaders coming together from different parts of the business. And, again, who are kind of wondering, who continues to, command what, right? In terms of budget, personnel, direction, strategy. So trying to be as clear as possible, like developing very clear accountability and delineated authority is going to be important in those environments so that folks really know what they're responsible for and what they're not responsible for. And then again, trying to foster alignment amongst that team is going to be super key.
Now, a lot of what you've talked about applies not just here in this response, but as you look at everything you talked about so far with, the way we phase a project and some of the incremental changes and the ongoing improvement approach, the executive commitment. We've talked a lot about good best practices for being successful in ERP implementations, regardless of company size. But if we look at the small and mid market, where I know a lot of your customers are, a lot of NetSuite customers and other ERP customers are, is there anything that sort of jumps out as being unique to the small and mid market, or things that are sort of special considerations or unique considerations that they need to think more about than a larger counterpart or a tiny little startup counterpart?
Yeah, I think it's a great question. The mid-market organizations oftentimes that we work with oftentimes have leaner teams within various departments. This often means that the process is maybe less robust, or doesn't need to be as robust, or perhaps can't be more robust, right? Just given constraints regarding personnel. And in those environments, it tends to be the case that the folks that are involved in the transformation process, have a harder time making time for the transformation because they have a greater level of responsibility overall for running the business. Oftentimes have their hands a little bit more in the business versus spending a majority of their time working on the business. Mm-hmm. And that tends to be the case in the mid-market, right? You don't want to hire big company people and bring them down to a small company and say, hey, go run this department. And they think they could point fingers when they realize they're like a team of two and they actually need to also do said work, right? So in the mid-market, I just think you have a lot more operators who are hands-on, who are running the business, who need to be in the detail, and are also engaging with customers, engaging with suppliers, engaging with internal personnel in a way that can't change or is tough to change, or there's really no other way to get it done, so to say. Yeah. And so I see a lot of those constraints play out there where, in a larger organization, you have, multiple layers within your finance or, accounting organization, or within your operations organization. And sort of some of the folks who are running the business or working on the business are already allocating 25, 50% of their time to special projects or, these working on the business type operational projects. So I think that in the mid-market, it's just a bit more exacerbated. And so again, some of the things that we talked about earlier, like phasing, reducing the scope, narrowing the scope as you go, those sorts of things, I think become, just even more important. You really got to try and be thoughtful about what your team can consume and not try to take on such a large amount of work that you can't get through it.
I'm here with Alec Epstein from Bryant Consulting. We're talking about lessons from successful ERP implementations. We've got a lot more to cover. We'll be back with more Transformation Ground Control. Stay tuned. My name is Eric Kimberling, and I'm the CEO and founder of Third Stage Consulting. Before we dive too far into today's content, I want to invite you to learn a little bit more about Third Stage Consulting, who we are and what we do. I've included a link to a video right here that describes Third Stage in a bit more detail. It talks about our story, our history, our philosophy, our clients, our service offerings, and that sort of thing. But in general, what Third Stage Consulting does is we're an independent and tech-agnostic consulting provider. We help clients through their entire digital transformation life cycles, beginning with digital strategy, software evaluation and selection, all the way through and including implementation planning, implementation readiness, and the actual implementation itself. We're technology agnostic, so we only represent our clients' best interests. We do not represent software vendors. But having said that, we work very closely with software vendors, all the leading players that you can imagine we've worked with, both in helping clients evaluate and select them, but also in helping clients implement those solutions as well. So we have a very broad, objective, agnostic view of the market that is meant to really represent your interest as you go through your digital transformation. I also encourage you to scan this QR code right here to get access to our resource center. This resource center has a ton of information, a ton of ebooks that are free. You have access to top 10 software rankings, playbooks for how to make your project more successful, guides to change management, YouTube videos, all kinds of stuff that are going to help you through your digital transformation. So I encourage you to scan this QR code to get access to those resources. And please feel free to reach out to me directly to brainstorm ideas about your project. Even if it's just informally, you want to bounce around some ideas and get some informal advice, I'd be happy to spend some time with you. So feel free to reach out to me. I've included my contact information below. You can also find it in the description field of this video as well.
The last thing you want to have happen is for your digital transformation to end up in court. I've been doing this for 20 years and I have seen everything. My name is Marcus Harris. I'm a software and technology attorney focusing my practice on drafting and negotiating software-related contracts and litigating software disputes across the country. Feel free to reach out to us at taftlaw.com. We'd love to talk to you about the litigation process and what you can expect.
Welcome back to Transformation Ground Control, episode number 201. My name is Eric Kimberling here at Darian Chwialkowski. You can find new episodes of this show every Wednesday by going to transformationgroundcontrol.com. The show is produced by Major Tom Productions and sponsored by Third Stage Consulting. We're here with Alec Epstein from Bryant Consulting. We're talking about lessons from ERP implementations. You talked about complexity a lot, and a small, mid-market, high-growth company probably got to that point of success because they weren't overly complex or weren't overly rigid. So it's like, how do you want to preserve some of that. You don't want to just suddenly flip a switch and become super structured, super hierarchical, super complex, all overnight. You want to keep that spirit of what got you to where you are, but at the same time, look for incremental ways you can improve and continue.
Absolutely. Yeah. I mean, we face that in our own business. Hey, why don't we provide this line of, why don't we provide this service to somebody? This customer would love it if we could do that. It's like, well, we don't currently provide that service, or software vendor is interested in us, supporting their technology or capabilities. So it's like hundreds and hundreds of possibilities. Very easy to have your organization kind of go after lots of different things. You got to stay narrow and focused on what it is that you're really trying to achieve and do well. And, if your team has more than like 2 or 3 goals at once, you're probably taking on too much.
Yeah. Good advice there. And, we can't talk about complexity and implementation without talking about customization. So I'd be actually really curious to get your take on this, because for a couple of reasons. One is because you deal with so many different ERP implementations, but also you're dealing with NetSuite, which is a SaaS product, which I don't want to say it's not as flexible as like an on-prem, highly customizable solution, but it kind of is. I mean, NetSuite has more, call it standard off-the-shelf functionality than a traditional on-prem system. But how do you find companies? How do you advise companies through this whole challenge that we all face in these implementations of wanting to use the software the way it was built versus wanting to customize to change the software in a way that it wasn't meant to be built?
Yeah, it's a great question. I think just as with any tool or solution you select, um, you know, there's going to be pros and cons to what you use off the shelf versus what you use, what you customize, how you decide to customize, et cetera. Whether to your point, on-prem, where you could or a solution that's a perpetual license or open source, you could buy it and make it your own, rip out the base code, and become an engineering shop yourself. Most of our companies in the mid-market just don't look at their business as engineering organizations. They're wholesale distributors, they're retailers, they're software companies that are making other products, not their own internal enterprise software. And so in most cases, they tend to want to lean on something that they know is going to work, right, pretty reliably, where a lot of the service and infrastructure is not on them. That's sort of a very common way for people to want to operate today. And I think the architecture, at least of NetSuite, and I can't speak to as many of these other ERP platforms. I'm sure they're all kind of trying to pursue a similar framework, because it's sort of the way of operating. It's this metadata architecture, right, where all of the configuration, customization, scripting, workflow type things that you're adding to the platform really reside as data, and these upgrades are really just kind of pointing a new application version at your existing configuration data. And this metadata architecture allows these upgrades to be pretty seamless. But it does say that you're customizing within the sort of framework and tools that are provided to you by that vendor, right? Which certainly does ultimately create sort of inherently has some restrictive nature to it, right? But I think the reality is that with some of these modern tools, where they make it possible for a mid-market organization to manage a pretty substantial amount of personalization and customization, as does say a platform like NetSuite, and sort of seamlessly facilitate upgrades and still be able to innovate over time. So I actually hit my space button there. I think that's going to allow us, allow an organization to be more successful in personalizing the application than probably if they were making changes to a base application. So I'm obviously a bit biased to the SaaS world, Eric, as you know, but and certainly to the NetSuite model. But I've seen a lot of companies' success. We run our business on the platform, and the upgrade process for us biannually is pretty seamless, and we've got I'll say a pretty highly customized environment. Not that I would recommend that for everybody per se, colloquially speaking, but we have, we've got it doing a lot of interesting things, and we innovate, right? So
yeah.
Now with that said, when it comes to customization, really, you do want to kind of, wherever possible, truly evaluate or assess whether or not you can use the out-of-the-box functionality of the platform you're adopting. I mean, it's just to say that you're not even willing to consider would be a very unwise kind of perspective in my point of view. So be open-minded, right? Let's take a look at what they can do, and then let's assess how we run our business today and whether or not we might be able to adopt that with relatively minimal change, some change, a lot of change even, and or if we can use that and tweak it or make small customizations. When we talk internally, we like to say that we want customizations to be minimally invasive if you do them at all. And I like to use the medical analogy. When you realize that there's a gap, the first thing you do is you don't try to similar to when you realize you have an issue, right? Of a sore shoulder, you're going to go first to a doctor. They're probably going to recommend physical therapy, right? Not shoulder replacement, not immediately into surgery, et cetera, right? There's a progression here of care. I think the same thing goes for customization, right? How can you take, say, the base commissions module, like I mentioned earlier, and layer in a couple of additional rules, or maybe a script or small process around it that sort of complements it and allows for you to get the job done while still using 80% of the core functionality, 90% of the core functionality, right? That's definitely a better approach versus wholesale, eliminating and building your own custom module. Also an option. Just know what you're getting yourself into, right? In terms of maintaining it, administering it over time. And you got to ask yourself, is there ROI in pursuing that, right? And versus alternatives, and opportunity costs, et cetera. So it's
And I think the good thing with NetSuite and also maybe to a certain degree, Microsoft Dynamics and even Salesforce, NetSuite seems to be evolving and moving towards this model that some other vendors are too, which is you've got a core SaaS product, multi-tenant in the cloud, but then you've got this platform that third-party developers now are creating other solutions, like to either bolt on to the core NetSuite or to provide some sort of variation of the product. And I think that's maybe something that's worth talking about too, is we talk about, a lot of times we talk about customization or not. It's sort of like either or. We're going to customize, or we're just going to use NetSuite the way it was built, or our ERP the way it was built. But now there's like this third option, which is sort of like, well, what if you don't do either? Or what if you do the standard approach, but then you also don't customize necessarily? Maybe there's a third party bolt on or a third party app built on the NetSuite platform or on whatever platform you're using that can provide some of the same benefit without the risk that you take on with pure customization.
Right. Absolutely. Like, there's 42,000 or whatever the number, of organizations running NetSuite. If you come across a challenge, you're probably not the first person to have come across that challenge. So the network and ecosystem effect really benefits you as a customer or user. In that same regard, somebody's probably come across that challenge before and possibly solved it. So, there's the lightweight way of going in and finding something in Stack Overflow, or somebody wrote a snippet of code and you can snag it and rip it and get to work and solve a problem pretty quick. The ecosystem benefits you in that way at no cost. But also in many cases, you're looking for a robust module. Let's say I see some folks on from one of my favorite suite apps, one that we use internally called Carbon Suite, which is a carbon accounting platform or package that sits on the NetSuite platform, inside of your NetSuite platform, to help you plan and track greenhouse gas emissions, right? And put plans together to become a more sustainable organization. Big priority for us, big priority for their customers as well, and required in many cases. Well, what did they see? They saw that there was a gap, right? Companies were trying to hacking reporting, customizing things to kind of develop this. And here they are now with the suite app that they've developed, and they can deploy to your account in a couple of weeks and get you up and running. So that makes a big difference. And we see that across a lot of areas, and system integrators like us and others, right? Our competitors also go after particular verticals or industries, and in many cases are developing and sort of accumulating kind of packages of anything from, pre-baked, ready to go, to, pre-built code that sort of can be worked from there to get to the last mile to solve problems. But regardless, are developing sort of accelerators, capabilities, intellectual property that really helps companies get a lot of vertical expertise and capability, despite adopting a very broad, ERP that services pretty much any industry with, big horizontal capabilities.
Yeah. So this is a great discussion and some great threads here. I have two sort of closing questions I want to ask. One is about your thought about the ERP industry looking forward to the future, but I also want to ask you a follow-up question after that about advice you might give to people that want to, that are entrepreneurs that want to do something entrepreneurial in the tech space. So let me start with the ERP implementation angle, though, or the ERP software industry. If you had to predict and put on your, get your crystal ball out, your magic 8 ball or whatever, what do you think the ERP industry looks like in the next 5 to 10 years? What are some of the major changes or trends you're excited about, or you think will emerge over the next few years?
Yeah, it's a great question. Yeah, I think the obvious sort of response in this moment is that the rise of sort of artificial intelligence or machine learning driven agents in particular, but just these broader capabilities are pretty exciting and interesting. And we're seeing now real practical use cases that are starting to kind of come to the forefront and be adopted in the enterprise. And that's going to continue. It's obvious that it's going to continue. And so our organization and anybody that's in digital transformation, whether you're internal at a company leading transformation efforts, or a consultant, or in-house at one of these ERP vendors, you need to be thinking about, what is going to change and how that's going to impact, you and your role, and how it impacts your customers, and what we need to be doing to stay ahead of what the user experience, the future is going to be, right? And I think big picture, you'll see, organizations looking to automate process, vis-a-vis agents in a way that may minimize seat growth, right? User count growth in these accounts and in these applications, and instead move towards more, agent-based pricing models. So you can see some of those approaches arising. And I think for organizations that are on the selling or buying side, to kind of rationalize what that means for your organization, and be ready to have some of those conversations and think about what that means for how you grow your business. So that's something that's really interesting, and there's a lot yet to be determined. But with our visibility and involvement, both working with customers, working with partners, working with vendors, we see everybody is making substantial investment, and so it's very likely to have a big impact, and continue to have a big impact in the near future.
Yeah.
I think the other piece is the kind of continued growth of the user base of some of these large vendors, and what the kind of compounding impact of that is, sort of this parabolic, R&D curve, if you will, right? Especially with this unified version. So if you think NetSuite's adding, I'm in the NetSuite ecosystem, so I'm very NetSuite centric in many ways, I think, but the growth is really substantial, right? Almost getting to 1,000 new companies getting up and running on the platform each month. I mean, it's pretty unbelievable.
Yeah.
And when you take into consideration, that number is growing, and all of these organizations are continuing to grow on the platform itself, you could see that the pace of innovation is only going to increase. And the amount of resources that are going into and toward R&D and innovation is just ballooning. And so I think over the next 5 years, we're going to see more and more change and rapid change in terms of capabilities, modules, features, acquisitions of companies that are, these third-party modules like we were talking about earlier, and incorporating them into the core product, et cetera, just as a means to, sort of accelerate the product roadmap and grow, wallet share with the customer. And so I think just it's really awesome to see the momentum, and to feel like you're, a part of it, be riding the wave, so to say, is awesome. And it's really exciting, right? A lot of our customers are getting incredible value, as a user of these systems and technologies. I'm also getting substantial value as a business owner, in this ecosystem. I'm seeing that our business is able to grow more effectively as a result. So I couldn't be more excited about this. I think this consolidation of R&D, especially with some of these big players, is really going to move the needle quickly for companies in terms of capabilities.
Yeah. No, that's great. Those are good. That makes a lot of sense, and I could see the industry going that same direction. What about tech entrepreneurs? So a lot of people that follow our content are, aspiring consultants. A lot of them are independent consultants, or people that want to set up their own shingle or their own shop. What advice would you give to aspiring tech entrepreneurs that want to do what you've done and build a company like yours?
Yeah. I like to say that some of the proudest promotions that we've given are when folks decide to leave our organization, start, try to hang up their own shingle. I think it says a lot about our organization and our culture that we invest in people so substantially that they have the capacity to do so. And I want to run an organization, or be a part of an organization that, makes that investment in people, empowers them to get a holistic understanding of the business, so that they could feel that confidence. But with that said, so I do actually help mentor a lot of folks that are, putting up their shingle, so to say. And, I having been through that experience, I can definitely resonate with some of the challenges that they may feel on a day-to-day going through it. I think the first thing is prior to going into it, really make sure you know how to sell. When you're an initial founder, you're 1 to 5 people. I think that's probably one of the biggest things that us as sort of technical background folks may struggle with. And, a lot of us even have sort of a love-hate relationship with the concept of being in sales, or doing sales, performing sales. I think that the reality is, if you want to be a successful entrepreneur, you need to be able to sell yourself. You need to be able to sell your team. You need to be able to sell your service. And if you're not comfortable and capable or willing to do that, you're really going to straddle or struggle. You have to be prepared to be out there and be in the limelight and be in front. Otherwise, you're just not going to be able to be as successful as you'd like. Be very technical and hire a sales counterpart. That's also a good strategy. Maybe find a good co-founder who complements you. Would make a big difference. And I've had that on the opposite side with operations, with my co-founder Cassius as an example. And I think we've complemented each other very well. So I would say that's key. Like I mentioned earlier, hiring the best people, hiring people that are better than you, listening to them, taking their advice, empowering them, I think is super key. And then, like I mentioned earlier as well, mentorship. It can be very hard, especially if you're an individual contributor, an independent consultant, like you mentioned. It could be, if you're an independent consultant or a small team, a solopreneur, so to say, it can be very isolating and challenging to find community. And, but the reality is that there's a lot out there. There's a lot of options for you, lots of folks who are there to help. If you have questions and you need help, more likely than not, when you reach out to folks, you'll find they're pretty helpful and they're willing to lend their time to fellow entrepreneurs. So, I know that I've made that time. I've made time to help others and will continue to do so. And I think everybody really should. And there's good communities out there, CEO or founder type communities where you can, get together with like-minded folks, get into a forum, share ideas, share perspective, learn from one another. And then, of course, I would recommend reading. You can see I've got some bit of a library there behind me. Right. And I think reading and developing yourself is also really important. Don't be so caught up in the day-to-day of running your business that you forget that your performance is critical to your organization's success. And certainly I have to have these like gut check realizations with myself every 3 to 6 months, oftentimes brought on by some of my team sharing feedback with me. Says, hey, you really need to look inside and figure out how to, improve yourself, right, in some regard. And so I think that's key. And it's helpful to have people that keep you in check and to have that open communication as well. So yeah, find mentors, surround yourself with people that can help you, surround yourself with people that are sharper than you. And the journey definitely gets a lot easier.
Yeah, it's great advice. All right. Thank you, Alex. Great conversation. Appreciate you taking the time here today. We've got some follow-up we're going to get into based on that conversation, some follow-up threads we want to jump into. But first, we're going to take a quick break. We'll be back with more Transformation Ground Control.
I'm excited to announce the release of our 2025 Digital Transformation Report. It's available now on the Third Stage Consulting website, www.thirdstage-consulting.com. This report gives you an unbiased, technology-agnostic insight to help you optimize your organization's projects for success. Get your copy today using the QR code in front of me or on our website.
Are you looking for ways to promote your product or service to enterprise technology decision makers and influencers throughout the world, like the ones who listen to this podcast? Major Tom Productions creates media, events, and influencer marketing for B2B technology providers. Our productions are exciting, educational, disruptive, and effective. Most importantly, they create results. Our content is unlike any other in this industry, engaging, influential, and trusted by technology buyers and influencers throughout the world. Each month, our productions reach hundreds of thousands of targeted buyers and decision makers who trust and engage with our honest and tech-agnostic content. With long-tail viral results and engagement with our content, Major Tom Productions provides a way to reach your target market and create awareness, calls to action, and a connection with potential customers. So collaborate with us today. Learn how we can feature your product or service on podcasts such as Transformation Ground Control, Journey to S/4HANA, and Journey to Dynamics 365. We can also feature your brand on our YouTube channel called Digital Transformation with Eric Kimberling, which boasts over 100,000 subscribers and over 2 million video views per year. You can also participate in our in-person events, including our Digital Stratosphere Conference. Contact us today to learn more. We can tailor a marketing campaign that works for you. We look forward to helping more people learn more about and become engaged with your brand.
Hello, welcome back to Transformation Ground Control, episode number 201. My name is Eric Kimberling with Darian Chwialkowski. You can find new episodes every Wednesday at transformationgroundcontrol.com, and you can also see the past episodes that you may have missed at that same website, transformationgroundcontrol.com. And Darian, we just had our discussion here with Alec talking about keys to successful ERP implementations. What were some of your thoughts and takeaways from the conversation?
Yeah, great conversation. I think that he made some great points, and also we had some really good questions from the audience. So I want to kind of dive deeper into the topics a little bit and ask a few more questions from the conversation, starting with how do you balance the need for flexibility and a transformation roadmap with the discipline required to achieve long-term goals?
Yeah, that's a great point. I mean, first of all, you want to make sure your long-term goals are where you start with your ERP implementation in terms of defining what it is you want to get out of your ERP investment. That alone won't solve everything, but at least get you started. And then, by having that as sort of the guardrails or the guiding light for your implementation, you're more likely to do something that's aligned with the company and with the overall team. So I think that's the key, is to really start with that long-term strategy. But then you've got to break it down and figure out, now, how do we break it up into manageable chunks? And I know Alec talked a lot about that too, about how you phase and you break down the project into smaller phases, and you don't want to overcomplicate it. You want to make it easier and more digestible for your team members to adapt to the change. So that was a big theme I know he touched on too. But I think it's tricky, but I think it's totally doable, where you can have that long-term vision, that long-term alignment with your long-term strategy. But it doesn't mean you're going to accomplish that overnight, and you can break it out and prioritize based on what that long-term vision is.
Yeah, absolutely. And one of the other things that I know was touched on was change fatigue and communication. So besides or beyond communication, what are some other strategies that can help mitigate change fatigue during a large-scale digital transformation?
Yeah, I mean, so I struggle with this a bit because I've seen both sides. I mean, I know Alec mentioned that part of how you combat change fatigue is to break down the project into smaller phases, so it's more consumable, by your organization. And that is true, but I've seen companies take that concept too far to where it's just constant change and it's sort of constant chaos. It's just constantly never-ending chaos and disruption, and people get tired after a while, and that's just human nature to some degree. And even if we take Alec's advice, what's going to happen is people will get tired over time. But I think there's other things you can do to mitigate, still do what Alec suggested, but mitigate the risk that the change is so constant, so ongoing and never ending, that people do get fatigued, and they will get fatigued, even if it is incremental, smaller change. Just the fact that it's always changing can be stressful. And it depends on how, open to change your culture is, but you will experience it at some point. So what you can do though, is you can start to rotate team members in and out of the project. You can start to mix things up so that you're not having the same people doing the same things over prolonged periods of time. You can start to rotate people in and out. Now, certainly you don't want to do that at the expense of continuity, because there is some value in having continuity, of course, but you've got to balance that continuity with the fact that people will get tired, they'll get burned out, people will naturally leave on their own. So how do you manage around that? And so that's the balancing act that I think organizations have to do.
Yeah, absolutely. And sticking to change, one other thing that was mentioned was leveraging learning management systems to roll out incremental changes. What other tools or technologies have you found particularly effective in supporting phased transformations?
Well, I mean, certainly agile methodologies have supported this concept of phased methodologies and rollouts, but agile methodologies can also get you into trouble because they miss out on what you mentioned before, which is the alignment with the long-term strategy and the bigger picture. So I think, if you can introduce bits and pieces or flavors of agile to your implementation, that's one way. That's probably the most common way. And then certainly change management. I mean, looking at change management as a way to not only increase user adoption, but also as a way to change the culture, to focus on innovation and constant improvement, just as Alec and I talked about. Change management is a great tool or mechanism to do that as well.
Yeah, absolutely. Well, what a great conversation. I'm sure there's plenty of more different things we could touch on, but overall was a great conversation. And again, the audience had some great questions during that.
Yeah, absolutely. It was a good conversation, and enjoyed having him on the show. And we did talk in that conversation about the things you need to be successful, but we also talked about some of the mistakes that companies make in their implementations and some of the things that can lead to trouble or failure. And we want to shift gears and talk about that a little bit more here right now. We want to play you a clip from our YouTube channel where I talk about the one biggest mistake that most project teams make. And if you had to pick one thing, this would be the biggest one that oftentimes leads to and cascades to other problems and challenges and symptoms. So if you can fix this core issue, you don't solve all your problems, but you get to the root cause of what those challenges are. So let's roll the video and we'll unpack what that one thing is that you need to be successful, or the one thing you need to avoid failure in your project.
So as I mentioned in the intro of this video, what oftentimes happens is organizations find themselves in a situation where they have a stack of problems that have added up throughout the transformation. It usually starts with falling behind schedule, running over budget. You start to have change management issues and resistance to change. You start to experience a misalignment as an organization. People aren't on the same page with the direction of the project. You start to suffer from poor project management and controls. The system integrator runs away with the project and takes control of the project without including your people in the project. Those are just a few examples of those symptoms that we often see. And if you're a total quality management type person and you've ever seen those fishbone diagrams where you do an analysis to figure out how do all the symptoms lead back to a root cause so that we can attack the root cause rather than the symptoms, that is the same for digital transformation failure. A lot of times people think there's hundreds of reasons why a project fails, but what I found over the years and what our team has found is that if you boil it down to one core issue, that one core issue is what causes all the other problems throughout a project. Now, certainly, once you address that core issue, you could still have issues with poor change management, and you could still have issues with poor project governance and controls. Those still could be problems, but more often than not, it's that root cause that amplifies those symptoms and make those symptoms appear as though they're the reason why the project is failing. So you might be asking yourself, well, what's the root cause? Well, the root cause of failure, and the one thing that causes all those other symptoms that I mentioned, is unrealistic expectations. A team goes into a project and doesn't have realistic expectations for the project, and that leads to a bunch of bad decisions later. So let's talk about in the next segment what that means, and we'll dive into that in more detail. So let's talk about unrealistic expectations in digital transformations and ERP implementations. Oftentimes what happens is when an organization has chosen their technology, they've gotten budgetary approval, the management team and the board of directors is on board with the project, momentum and excitement is an all-time high. And as a result, people are very optimistic about the project, so optimistic that they oftentimes go down the path of unrealistic expectations. They think the project is going to be a lot easier than it really is. So then what happens is you have a software vendor and the implementation technical partner that comes in and gives you an overly optimistic proposal of what the implementation will look like. And when you put these two forces together, the fact that your team is very optimistic and your outside software vendors are very optimistic, that creates a recipe for unrealistic expectations. We think the project is going to take a lot less time than it really will. We think it's going to cost less. We think the risk is less than it really is going to be. We tend to think that people will resist change a lot less than they really will. Just as a few examples, those are some things that oftentimes happen when those two forces collide. And that leads us to a project plan, a budget, a set of expectations, and a set of understood risks that are very unrealistic and don't reflect reality. So that's why unrealistic expectations are such a problem. So to take it one step further, unrealistic expectations lead to a bunch of bad decisions later. And the reason for that is because we've claimed a stake on the fact that we are going to meet these unrealistic expectations until we realize midway through the project that we were never going to achieve those expectations. So then we have to start making really bad decisions. We have to cut scope. We have to cut change management. We have to cut that extra round of user acceptance testing. We have to cut that extra round of training. So we end up making really bad decisions to try and force fit our project into a set of expectations that were completely unrealistic to begin with. So this is why unrealistic expectations are so damaging and cause failure in so many different digital transformations. So we've talked about what unrealistic expectations are and what causes them, but what can we do to have realistic expectations? Well, there's a few things I would leave you with that ensures that you'll avoid this trap of having unrealistic expectations. The first is to take vendor proposals with a grain of salt and understand that they are overly optimistic. They're salespeople that don't fully understand your business, and they are incentivized to not share too much risk or not to concern you too much about how much time, money, and effort it's going to take to be successful. The reality, though, is it is going to take you a considerable amount of time, money, and effort to be successful, and you just have to go in with those expectations and your eyes wide open. The second thing you need to recognize is that software vendors are just one piece of the equation. When you look at an overarching digital transformation, the technology work stream, the technology implementation is just one work stream. You also have change management. You have process improvement, you have the architecture and data and integration components, you have the overarching program management. All those things are things that the vendor typically does not do, but yet you need to do to make the project successful. So we need to augment what the software vendor tells us in their proposals with other activities and work streams that are going to complete the project to make it more realistic and ultimately more successful. And then the third thing I'd say is that if you can have independent and tech agnostic advisors that are not incentivized to sell you software or to sell you technical services, those providers can help provide a better view of what the project is really going to take. They can base it on experience, having helped organizations through digital transformations. And they can do it in a way that represents your best interests, not necessarily positioning the software vendor to sell more software to you. And certainly organizations like mine, Third Stage Consulting, tech agnostic consulting providers like ours can help you through that process. So if you do these three things, that's a pattern that will help you ensure that you have realistic expectations when you go into the project. You certainly don't want to lose that momentum and excitement that you have early in the project, but you also want to add a dose of reality and careful skepticism before you get too far into the project. Now, one thing I alluded to earlier in this video is the fact that part of the reason why organizations have unrealistic expectations is because the software vendors don't fully understand your business. And that's a reason why during your evaluation stage, before you get into the implementation, you want to make sure to really define who you are as an organization, what it is you want to get out of this digital transformation, and fully understand what that jump is going to be. How big of a gap is it between current state and future state? Because that difference, that delta between current state and future state is what ultimately drives the time, duration, cost, and risk of your digital transformation. So for example, if you're going from an old mainframe system to a modern cloud SaaS-based system, that is a massive jump when you compare it to an organization that maybe is already using a semi-modern ERP system and they're doing a relatively simple upgrade. Those are two very different implementation scenarios that will lead to two very different outcomes and two very different timelines and budgets and risk profiles. So you really need to understand upfront before you commit to the project what exactly you're getting yourself into and have that tech agnostic and independent view of what it's going to take to get there successfully. And this is especially true if you're treating your digital transformation as a business transformation, not just a technology project. So these are just some of the things to be aware of to understand why companies fall into this trap of unrealistic expectations. If you can solve that one problem, and if there's only one problem you really attack in your digital transformation, I would start with making sure you have realistic expectations, because it won't solve all your problems, but it'll ensure that downstream throughout the project, you're at least on a better track to be more positioned for success.
So that was a clip from our YouTube video or our YouTube channel where I talk about the one transformation mistake that you're most likely to be making right now. What were some of your thoughts and takeaways from that conversation, Darian?
Root cause of digital transformation failures, breaking down complex issues into a relatable and actionable insights. I thought that was a great video for different companies if they are experiencing that right now. But I wanted to follow up with some questions to kind of expand on what you were talking about. The first one being, you mentioned that vendors and implementation partners contribute to unrealistic expectations. What specific red flags should companies look for in vendor proposals?
Well, I don't know if it's a red flag to watch for, but the way to find the red flags would be to just look at all the assumptions and really dig into the assumptions, because there's a lot of seemingly simple and innocent assumptions that can lead to completely unrealistic expectations. So something real minor like, customer shall be responsible for cleansing and migrating data. And that might be just literally one sentence in a list of assumptions. And you think, okay, fine, I'll do the data migration myself. But then you don't fully realize, what does that mean? I mean, that's going to take a lot of time, a lot of resources. It might actually extend the project duration. It probably will extend the project duration. So there's things like that you've got to watch for. But I think another, in addition to kind of looking at what is written in the contract as far as assumptions, and especially when it pertains to something that your internal team is responsible for and that the vendor is not responsible for, you also have to look at things that are not written in the contract. So things around like decision making. So you think about how long it's going to take you and your team to make decisions around design questions or business process questions, organizational questions. That just takes time. And most of the time, the software vendor doesn't factor that into their plan, because it's not that they don't care. It's just they assume you're going to make a decision, you're going to tell them, and they're going to build the software accordingly. But if it takes you a week to make a decision that they thought would only take you, same day or whatever, that's an extra week you've got to add to that work stream, which, you add that up times however many hundreds of times that happens in a project. And you can see how, a 1 year project can quickly turn into a 2 year project. So that's what you've got to look for is the stuff that is in the contract, but you also have to know enough to know what to look for that's not in the contract as well. And the things that typically cause delays and budget overruns.
Yeah. And maybe to expand on that a little bit, one thing you also talked about was the gap between current and future states driving time, cost, and risk. What is the best way for organizations to assess this gap early on in the process?
Well, when you do your current state, you want to look at sort of just the level of maturity and sort of where you're at. And then you want to look at what you're trying to accomplish with your future state and really be honest about that gap. Is it, because a lot of times executives, they want that gap to be big. They want there to be this big upgrade in their processes and the technologies and the people and all that stuff, which is fine, but they don't account for the fact that that's a big gap, which means there's more risk, there's more complexity, and it's going to take longer. Versus another project team or another organization that looks exactly the same otherwise, but they say, no, we're not going to shoot for these big, massive changes. We're just going to take more of an incremental improvement approach. That project's not going to be easy, but it is going to be easier and probably take less time, less money, and less risk than the company that says, no, we're intentionally and deliberately going to change more because we want to get more value out of it. And that's okay. It's not a bad thing. It's just like you have to calibrate your make sure that your plan and your strategy, your resource commitment, your budget, it all has to be in sync. And if it's out of sync, that's why these projects get into trouble, is because they were never in sync and they were never realistic to begin with.
Yeah. And with that, if unrealistic expectations are such a common issue that we always talk about, do you think that the industry needs new standards for project estimation and budgeting?
I wouldn't say they need new standards. I think that, because your technology provider is doing just one thing, their job is to manage one work stream in your overall project. It's to design, build, and configure and roll out new technology. And that's important, but they might give you a realistic plan that fits their needs, and it could be completely realistic. But the problem is it's all the other stuff. It's the data migration, it's the third-party apps you start to build in, it's the process improvements you start to roll out, it's the organizational change issues that you experience internally. Those are all things that don't have anything to do with the software vendor. So it's in some ways unrealistic that you would expect them to know all those things, but it's also unrealistic to think that you don't need someone that knows those things and can figure that stuff out for you or help you figure it out. So it's really incumbent on you to say, well, either we're going to figure this out ourselves and we're going to create a complete plan that takes all these things into account, or we're going to bring in someone from the outside that can help us do it objectively and independently. And that, quite frankly, is something that we do a lot for our clients, is we help them take as a starting point what the software vendor or the system integrator has provided, but then we add the other things, the other assumptions and the different complexities and variables that go into it. Those all become really important factors that need to be built in. So that's something that you have to do. So I don't know that I think that would be the standard I'd suggest, is that you don't just rely on what a software vendor tells you. You also build in an overarching program with some realistic assumptions behind it.
Yeah, absolutely. That would make sense. And I want to finish off today with one last question. What's your one piece of advice you would give to companies starting a digital transformation to ensure that they set themselves up for success?
I'd say that, making sure that they've got that internal alignment to begin with, because the internal alignment will help you get to more realistic expectations. So if you've got the team all on the same page with, hey, we know we want this to be a big, major overhaul of our current operations, that's great. The fact that you have that internal alignment and understanding is really important. And along with that should come the understanding and the internal alignment and understanding that means the project's going to take more time, more effort, more money, more risk. And so let's make sure we invest accordingly. So I think if you have that internal alignment, that's sort of a prerequisite to getting to realistic expectations, because you can't have realistic expectations unless you're all on the same page with what it is you're trying to accomplish. Once you know that, then you can get to the next step of getting those realistic expectations. So that'd be the sort of the caveat or the prerequisite I'd throw out there.
Yeah, that makes sense. That's awesome. Well, Thank you for answering those follow-up questions. I feel like that gave us a really good full picture of that video.
Yeah, absolutely. Yeah, thanks for your commentary on it as well. And thank you to the audience for the great questions and comments throughout this episode. We'll have a new episode next week, but in the meantime, you can go watch all the past episodes you may have missed. You can go to transformationgroundcontrol.com to see that. You can find new episodes every Wednesday. The show is produced by Major Tom Productions, sponsored by Third Stage Consulting, which is an independent and tech agnostic consulting firm that we work for. And we can help with software selection, implementation readiness, change management, program management during implementation, all that good stuff. So if you'd like to learn more about it, reach out to us. We've included contact information below. I hope you all have a great week. In the meantime, we'll see you next week on the next episode of Transformation Ground Control. Take care.